Welcome back to Velshi Ruhle. In just a few minutes, the Federal Reserve is expected to announce an interest rate cut. If that happens, this is not normal. The last time rates were cut was December 2008. Do you remember when that was? The middle of the worst financial crisis since the Great Depression. So let's take a look at that year and this year side by side. In December of 2008, stocks were down by 37%. Compare that with this year, they're up 20% year to date. Back then, unemployment was at 7.3% and going up. Today, it's at 3.7%. That is a 50-year low. And in the fourth quarter of 2008, GDP growth was negative 8.4. Second quarter of 2019, GDP growth is at 2.1%, which is on target with the 10-year average. Joining me now, CNBC editor at large, John Harwood. John, our economy may have cracks in it, but it is fine. It is A-OK. What is the rational argument for cutting rates? In history, rates are cut when you see a downward spiral.
I think the argument is to try to keep this 10-year recovery alive at a time when the global economy is weakening, the U.S. economy is slowing down. Central banks around the world have been cutting, and that's why, in addition to President Trump, who has his own different reasons for demanding a rate cut, you've got people like Larry Summers and Jason Furman, who served President Obama, saying rather than go through the risk, the pain to individual Americans of a recession, cutting short the recovery, take preventative action now, even a quarter-point cut, and try to extend it. I think that's the argument, and I think that's what the market is fully expecting Jay Powell to do.
A quarter point. The president has said he wants a great big cut. If we hear Jay Powell say they'll be cutting rates as appropriate, that would imply there's more to come. But at this point, 25 basis points, it's simply to hold things off and keep things steady?
I think that's right. You had Janet Yellen, Jay Powell's predecessor, appointed by President Obama, not reappointed by President Trump, come out and say a quarter-point increase would be, or a cut would be appropriate. I think, we talk about the risk that Jay Powell runs of looking like he's been cowed by a president who doesn't respect the independence of the Fed. I think if they went to a 50 basis point cut, that's when you might see that charge. I think a quarter point cut is something that markets would expect as a well-justified response supported by economists across the board.
Hey, MSNBC fans, thanks for checking out our YouTube channel. Subscribe by clicking on that button down there and click on any of the videos here to watch the latest interviews and highlights. You can get more MSNBC for free every day with our newsletters. Just visit msnbc.com/newsletters to sign up now.